We are back at it again here with another video with Invest for Tomorrow. To the first time viewers and investors, welcome to the channel. To all subscribers, welcome back. Here we are with the SPY, the SP 500 index, continuing that transition from the dip area into the rip area. And within today's volatility, our SPY bot sent out a bull indicator since 11:40 a.m. And from that moment forward, inflows were above the midpoint. They slightly crossed to the downside, found support, bounced back up, crossed the inflows to the upside, above the midpoint, full strength on 42 vision, and call options went up 150% plus within hours, guys. If you guys want to receive this clarity and edge over the charts, you can now gain access to it as well. The link is down below in the description to the 42 vision indicator, getting connected over to our bots, and becoming part of our growing community of investors, all looking to learn and grow together and using these resources to maximize in either direction, whether stocks are going up or going down within the volatility. So here we are with the SPY breaking out, continuing to hit new highs, going to higher levels where resistance levels are important, right? We need to talk about where it's coming. It's getting to a pivotal level here of where rejection happened back here at the beginning of October. But before we break it all down, I want to share with you guys the home run opportunity that was mentioned this morning over at the Discord. So the home run of the day was spectacular and beyond expectations. And if you guys want to know about these stocks early on in the pre-market and receive this edge and clarity over the charts, check out the link down below in the description to the Discord. And by joining, you'll become part of our growing community of investors, all looking to learn and grow together. So the home run of the day was from our Tesla bot. Our Tesla bot sent out a bull indicator at 11 a.m. And from that moment forward, inflows crossed the midpoint. They stayed above, and the continuation of strength on 42 vision continued. And within 1 hour, call options went up 100% plus, guys. If you guys want to receive this clarity and edge over the charts, check out the link down below in the description to the Discord. We look forward to having you join us, and we strive for opportunities like these every single day. Let's jump into these charts. So here we are with the SPY, the S&P 500 index, bouncing from a new 52-week low way down here at the 340s, 350 range, and coming back up to test the highs of the beginning of October. Is it going to reject up here or break out of it and hit newer highs? That's what we're going to break down in today's video. A lot of people are questioning this, and since Friday, with what Daly stated, right, we covered all of that in our video, and Yellen stated, the markets are moving very, very quickly with strength to the upside. And based off the technicals in 42 vision, it had hit a dip area that date in the pre-market. And here we are into a full rip area of strength. I'm going to pull up the bull and bear indicators and the inflow versus outflow, which you can now gain access to as well. The link is down below in the description to the 42 vision indicator, getting connected over to our bots and becoming part of a growing community of investors, all looking to learn and grow together by using these resources to maximize in either direction, whether stocks are going up or going down. And in today's video, I'm going to pull up the inflow versus outflow indicator, which adds that extra layer of confirmation and gives us that edge within the volatility. So here we are with the SPY under a bull indicator since the opening, right, on Friday. And it's been holding since, right? Full transition from the dip area to bright green on that same day. Continuing the full strength here in that bull indicator not getting canceled. And inflows have stayed above the midpoint ever since they crossed on Friday on the 30-minute chart. Now, if it's your first time here coming across the channel, why with red borders is what we call the dip areas. And the last time we touched that was back here on October 13th. And we went ahead, got that bull indicator, inflows cross, triple confirmation, full strength. And then also the other time that we hit it here was from the 14th to the 17th. You could see that bull indicator there, full strength on 42 vision, and those inflows cross to the upside. Every time we hit those dip areas, there tends to be reversals. Some are stronger than others, some are weaker. And then we hit the rip areas, which is bright green, which is extreme strength. And eventually things tend to slow down. As you can see here, every single time it has had its slowdown, and it's been followed by consolidation or a big drop. And here we are going in very strong, but it's our first time seeing here the outflow starting to pull back. Even though we have not crossed the midpoint just yet, we did go from red to green here. It's pushing back up. It has had outflows since Friday going into today, right? And it's our first time seeing bright green bars with red borders, where things are starting to get a little bit more volatile, then more directional to the upside or downside, if not volatile within the up and down, and the consolidation that is forming here at these levels that will create a tight area of consolidation of support and resistance, and eventually either the bulls are going to take over and push it up higher, or the bears are going to try and bring it down lower. And we need to watch these inflows versus outflows on the 30-minute, and not only on this time frame, but also on the 15-minute, as a first bear indicator has popped up on it, and you could see there the volatility of the inflows versus outflows fighting, but it has stayed above it, and that's the one thing that's been holding up the SPY overall to the upside, because it's been above it on the 15-minute, on the 30-minute, and on the 1 hour. You could see here how those outflows have started. We're still above the midpoint, far from it, but the fact that we switched from green to red, it means that in this process there's a hidden divergence, and if this red continues to go lower, even if it doesn't cross the midpoint, there's a lot more outflows than inflows, and eventually it will reflect in the chart, especially if the bull indicator gets canceled by a possible bear indicator, guys. Something to keep in mind. I'm going to share with you guys the key levels I'm watching going into tomorrow, but before we do, I want to share with you guys where it is that these price targets, that analysis ratings are coming from, and why everyone believes that the stock market will capitulate or quote unquote bottom around 3,000 to 3,200. We're going to break that down, and then we're going to break down the key levels here within the volatility for tomorrow. So here we are with the SPY, the S&P 500 index, with our bull and bear indicators popped up, and the purple and blue line, which are lagging indicators. And I've noticed that this is where a lot of the price targets are coming from, because it lands close to it, and the history has shown us where capitulation has happened, or where the crash has gone even further than expected. And we're going to look at that together here in just a moment. And this is a lagging indicator, and I'm going to show you guys why. Here on the 1 week, we got a bear indicator on our bull and bear indicators on 42 vision since January, and this purple line did not cross until the most recent bear indicator here. And our inflow versus outflow showed us how this bull indicator turned out to be a fake out, but I just want you guys to see how the blue and purple line, I like to use it for technical reasons over the charts, but not for intraday trades or action, right? Price action, because it is a lagging indicator. We've known way back here with 42 vision that the bearishness had started, lasted for about 7 months. This turned out to be a fake out. We got another bear indicator here, and those lines just crossed, guys, after 8 months of downtrend. So it is a lagging indicator, but it shows us, based off the history of the chart, for technical reasons, where supports or capitulation or bottom zones are, right? So in 2020, things capitulated and moved very quickly below the purple line and found support around the blue line. Now, in 2018 correction, it found support around that area in between the purple and blue line, but bounced right back off of it, right? You could see that bounce right there as things started to come back up. And then back here, same thing in 2016, 2015, 2011, even back here in 2010. But there has been 2 times where it has actually crossed, right, on the 1 month, and it's gone even further. And that's way back here on the 2000 bubble and also 07. But what I've noticed is once that cross happens, a few months after, the bottom may be close or in, right? And those bull indicators have popped up on our 42 vision right around the crossover back up in 2000 and 2002. And then on the 07, 09, it actually popped up before it even crossed, actually a whole entire year before. So again, it's a lagging indicator, but when it comes to analysis, this is where this price target is coming from. And we're going to zoom in here and look at this together. So right now, the price targets that you see out there by analysis ratings is between anywhere from 2,800, 2,900, all the way up towards 3,200 to 3,500. And where are they getting it from? Well, the 3,500 people are optimistic and believe the bottom is in because we've hit those levels already before. But this blue line down here is at around 306. This is very close in between that area between 3,000 and 3,200. This is where a lot of analysis price targets are landing, and it has to do with this right here and coming back pretty close to the area of the strength before the 2020 crash. And a lot of analysis ratings are coming to the point where they believe capitulation or the bottom is going to happen like the 2020 crash, where it touches the blue line and bounces somewhere close to it, coming back up and not having a full crossover like the 2000 and 2007 crashes. We'll have to see how this plays out, because if it plays out like any of those, there's a lot more room to go. We are under a bear indicator here in the bigger picture, and that's that level that everyone is referring to here at around 306, 305. And if things continue to pull down, this could eventually go a little bit lower, which is where that 2,800 to 3,200 area falls, which would be around those possible levels. So something to keep in mind, where capitulation or a bottom could happen. And of course, it isn't guaranteed, but this is where I believe those numbers are coming from these lagging indicators, and based off the history of the chart. When it's actually bounced off the purple line, it's happened very quickly. When it's crossed it, it tries to touch the blue light line here. So we need to look at that very closely. Now we're going to pull up the bull and bear indicators and our inflow versus outflow again, and we're going to look at the charts here going into tomorrow. So here we are with the SPY, the S&P 500 index, and the first levels to watch here is the support of 373. If that gets broken through, the next level of support is down here towards 368. I'll be watching that very carefully if the bears try to reappear and bring these outflows, right? Something important to keep in mind is we want to see this stay above the midpoint. If it gets crossed, it could start reflecting in the chart very quickly, and it's something to keep in mind. Now, when you go ahead and look at this here, you could see how things are actually trying to continue with strength, right? Full strength here on 42 vision, bull indicator. But it's going to be important because it's reaching a key resistance level up here of 379, 380 range, guys. It needs to break above that. If that's accomplished, the next resistance is 388, 385 area. So something to keep in mind. We want to see on the 1 hour these inflows to stop slowing down and go from red to green. Pull away from the midpoint to the upside. Stay away from going lower. Stay away from that support of 373. And on the 30-minute, we do not want this to cross downwards. And same thing on the 15-minute. We want this to stay above the midpoint and pull upwards with strength. So super important to keep this in mind. It's reaching a key area of resistance. It could try to slow down or get things pretty choppy going into tomorrow. We'll have to see how things play out, especially if these bull indicators also get canceled by previous bear indicators that could pop up and cancel it here. It is overextended. We're at extreme strength, and outflows have began since Friday in the aftermarket hours and for most of the day today. It hasn't crossed to the downside yet, but something to not overlook. I'm going to be watching those inflows versus outflows very carefully, those support and resistance, and that strength of the bull and bear indicators as they pop up. As always, guys, thank you guys so much for watching, and let's make some money.